Hello, and welcome to our business training webinar, QuickBooks Pointers for Contractors, brought to you by Project Solutions. Project Solutions is contracted by the South Dakota Department of Transportation to provide DBE supportive services to certified firms. We are committed to providing training and guidance that will help firms grow and build their business management potential. To accomplish this, we are continually developing live and recorded sessions on relevant topics to assist in your business potential. All our services are provided free of cost to certified firms. We offer one-on-one consulting to help develop your business and answer program questions. We can create a business plan, perform annual reviews, and more. We are also able to offer a complete business development training program. This can help expand your business knowledge, strengthen your financial literacy, and further develop your skills and abilities in business and construction management. If you'd like more information on our business development program or any other program assistance, please contact us at the phone number provided or the email dbe@projectsolutionsinc.com. Now I'm going to turn it over to Greg Hansen, our CFO and Consulting Services Manager, to present our QuickBook Pointers for Contractors training.
Thank you, Carrie, and thank you everyone for tuning in and watching. The topics we're going to work on throughout this process are varied, but oftentimes the problems with contractors are rooted in their accounting setup. So over the years, we've seen some of a pattern, and so we thought we'd make a session just on a few pointers for QuickBooks. So let's just dive right into it. Try to get this done in 20 or 25 minutes or so. The first one is let's get the right version of QuickBooks. If you go online, you can buy it right from QuickBooks. You don't have to buy the disc anymore. But the one you want to get is the Contractor Edition, QuickBooks Premier 2021. One user might be enough. Sometimes two users, meaning two people could get in at the same time, even though you might have 4 or 5 people in the company who need to get in. So you might want to subscribe for the 2 users. If you're going to use payrolls for QuickBooks, highly recommended. Another topic we'll be doing, but budget about $600 to $1,000 a year for getting the right kind of QuickBooks. So then once you have the right system, let's talk about getting it set up. And the chart of accounts is where it starts. And the chart of accounts is sort of the skeleton of your financial reporting. It lists the assets, liabilities, the equity, income, expense accounts also. Again, the formatting is determined by how you set this up. After you buy the disk or buy the software, this is the first thing you're going to do after you set up your company, where you put in your address and your EIN. So, chart of accounts. Let's look at some of the how to navigate the home screen. This is the home screen, and you can customize this. We'll talk about this a little bit. But chart of accounts, you can see it over here on the desktop, or you can see it under this toolbar under lists. Either way, but if you click on it, you're going to get another pop down, and we're going to talk about items, and we're going to talk about a little bit about payroll items. But here we are on chart of accounts. And this is a sample chart of accounts for this. This is a sample company that comes with QuickBooks, and you can see the chart of accounts, items listed here. If you set up your chart of accounts, or you can use account numbers. It's easier to follow if you do use account numbers, because you start at usually 1,000 or 10,000 and go all the way up to 8,000, a lot of room in between. So decide early on if you want to use account numbers. If you've been using some of the other systems from the past, you may already have account numbers and you want to use the same on this new system. So then you got to decide when you're going to make new accounts. You got to decide if it's going to be an income or expense or fixed asset, what other account types. Select. This is for job costing. You want to click that drop down, and you're going to get another list. Here you want to say cost of goods sold, or some of those that are job materials, job labor, subcontractors, and job materials, bonding expenses, stuff like that. So when you set up accounts, make sure you choose the right kind of account. Okay. Here's another good pointer about this is, as you set them up, you want to indented accounts or sub accounts of a parent account. And the parent account balance is the total of the sub accounts. For example, here we have illustrated QuickBooks credit card. It says $70, well, which is the subtotal of the field office, the home office, and the sales departments of 45, 25 plus 0. So then you can, when you run reports, you can have the condensed version of this or the expanded version, and this would be this report. This would be the expanded version. So pretty handy to set up these master accounts, and then you don't post to them though. You post only to the ones that are underneath those accounts. Okay. Couple of some pointers: avoid using the same title description in two different categories. Equipment. You don't say, if you just say equipment, is that an asset or is it an expense? Also, fixed assets, you don't need a separate general ledger account for each piece of equipment or vehicle you own. You can use that through items. So up to you, but we've seen people who have 3 pages of equipment. And if they set up a general ledger account for each one, it would be a little daunting. So liabilities, is it a short term or is it a long term? Lines of credits are short term, even if it's got an ongoing balance. This is something weighs in if you're applying for bonding, and sometimes loans when if all your debts are short term or long term and how much that affects your working capital. If you're a sub S or an LLC, most are today, add equity account. We recommend 2 accounts for each shareholder. One's for the money that person invests, another one is for they draw out from time to time, maybe to pay taxes. A little note there, the owner's draw is not the same as a paycheck. So a couple pointers there about how you that's your standard chart of accounts. Some more pointers for income, 3 or 4 accounts, and then you use service items if you want more detail. Covered more of that a little bit. So cost of goods sold, this is where mistakes are made for our contractors or engineers. You want to have job, labor, materials, subcontractors, and equipment separated from the overhead accounts. And you want to, this is accomplished by categorizing those job materials, job activities as cost of goods sold accounts and not as an expense. Okay, very important. And as you run reports, you'll see how helpful that is when you do that. So if you carry inventory, some firms may have stored materials. They manufacture aggregate. They may have inventory on the balance sheet as an asset. Okay, now we're moving along. QuickBooks creates several accounts by default, accounts receivable, accounts payable, retained earnings, and one called opening balance equity. And this is something that QuickBooks uses to balance the books. If you are setting up your system for the first time, and when you're all done, you run your balance sheet or you look at your general ledger trial balance, and the out of balance account doesn't say 0, something's missing, so that needs to be adjusted. So some pointers there. QuickBooks auto generates several accounts, and this is good advice here. If an ongoing amount in this account is an indication of an incomplete installation and inaccurate financial information, if it is not 0. Okay, let's as I mentioned a little bit ago, the sub-account, or I call it, is nesting. If you create these non-posting master accounts, QuickBooks auto-generates the payroll expenses. Now, underneath there, you don't want to post anything to that account. But underneath that, create 2 sub-accounts of payroll, and then another sub-account of payroll-related expenses. And then so you can have this represents a 3-layer chart of account, right? So there's under payroll we have wages, admin, wages, project management, and wages maintenance. These are suggestions. Here we don't have any wages for our field workers because why not? The cost of goods sold, right, in a different place. Payroll related expenses is another subcategory. Here's where we have our payroll taxes, any benefits, 401k, you have holiday pay, vacation pay. So this is how you can separate those activities into 2 separate accounts. And you can run a detailed report. You can get just a report with just payroll expenses, or you can expand it to this level or expand it down to this level. Pretty handy. We've seen some other accounting systems where they have each of these would become sub accounts, and this could take up a page of different accounts and account numbers for different locations. Really, QuickBooks has got a good process with this system. Another way is, so if you have equipment in your company, most of you do, create this non-posting master account called company-owned equipment and vehicles. And then again, this is the first tier, company-owned equipment and vehicles. The second tier is the equipment shop, if you have one. And then, so the third level then can be the maintenance and repair, parts and tires, fuel, depreciation. Under the shop could be rent, if you have a shop building, again, if you have a mechanic. So, and then there's a way you can have a contra account, as it's called, a credit account, where you can transfer these costs to jobs. So really slick. And you create another account in the cost of goods sold, machine vehicle usage charged to jobs. So anyway, if you aren't following this is something we'll have a little topic on equipment costing. But the chart of accounts, you set up a non-posting master account called company-owned equipment and vehicles. And these maintenance, parts, fuel, depreciation for sub-accounts, and sub-account of that can be the equipment shop if you have one. All right, moving on. Now we're going to talk about preferences. This is often overlooked, and I think it's because it's not on the home page. You got to go to the toolbar to find it. So I've used under chart of accounts. A couple pointers here on the preferences that are often overlooked. Here's the home screen of QuickBooks, and you click on the edit, and you get another down here, preferences. And here is all the preferences to be modified. There's more than this. We'll go over a few of them here. Really, accounting, this is a nice thing about QuickBooks and a not so nice thing about QuickBooks. QuickBooks will allow you to post to dates in the past. I mean, even several years ago. Sometimes you need to, and it gives you a warning. But here we are at the end of the year. When you start using 2021, sometimes people will forget, they'll put in 2020 and it should have been 2021. You can set this to correct, say if the transaction is more than 30 days old, you require a password. So slick. I like this about QuickBooks. Click on class. You want to use classes. We'll have more on that later, but it's a terrific way to segregate your work into different categories. Talked about this earlier, your chart of accounts. Do you want to use account numbers? You want to require account numbers. If you are going to use account numbers, it's best that you require it. Otherwise, you don't have a consistency. So that's one. Let's go to another one. This is bills. Do you want bills to be flagged as due or past due within X days? Here, QuickBooks automatically puts in 10 days. Maybe you want to put in 30, but okay. Another one, checking. Some people will have checking accounts for payroll. Another one for liabilities. If you want to have separate checking accounts, you can automatically program those so that they're by default called up by QuickBooks. Bank feeds, I would say turn those off. It's maybe good for really small or one-person businesses or your personal records, but you want to post transactions to your QuickBooks based on the source documents, not a downstream feed from your bank account. So for a business purpose, I would recommend that you not use that. And desktop view, all this you see in the desktop, you can turn those on or turn them off. You see them right here. So if you don't do inventory, just turn it off right there. So okay. Another one, you change the color. Here, this is set at blue and gray. Some people will have a couple companies in their QuickBooks, so it's useful to see the difference in color. So you can program that right here. Next up is items and inventory. Recommend you not use the inventory function to start. I haven't seen a company use the inventory function to their satisfaction, I guess, yet. It's pretty cumbersome. Most businesses that depend on the industry have a software specific for that. You might want to look at those first, and then you can merge or the general ledger data at the end of the month if need be. But I haven't seen the QuickBooks inventory. I saw it at a retail point of sale, and it was cumbersome. That maybe it's come a ways, but so just a pointer there. You do want to, if you want to do purchase orders, you can click it on there. Some people will use purchase orders. Jobs and estimates. You can, if you want, how do you want your reports titled? You can customize it there. If you create estimates, you want to say yes, then everybody creates an estimate on paper or Excel or some way, but we would like to work with you to help show you how to do that. Translate that information into a QuickBooks estimate. So you want to say yes. And you do progress invoicing, yes, projects are more than a month long, you're going to be able to track that progress on each project. What's next? On payments. This is, if you're watching this and you do the bank reconciliation, it's really helpful if you know that QuickBooks is putting all your deposits into one account before it goes into your bank account. QuickBooks creates this undeposited funds account, so it'll automatically deposit any deposit you make to that account, and you can transfer it to your bank account. It's easier to reconcile the bank statement if you're using this function. If you remember to make the deposits in QuickBooks from this fund. Next up is payroll and employees. If you use a full payroll or no payroll, if you're using a payroll service, you would click on no payroll, and a lot of what we're talking about here is not going to apply. If you are using a payroll service in your construction company, you might want to look at bringing your payroll in-house, because it's really hard to job cost third-party payroll. Even though they say they can merge it with you, you end up doing a lot of the work yourself. We want to point out some of the set the preference for these different items right here. But what do you want to see on the pay stub? You can show it there. Do you want to assign one class per entire paycheck or earnings item? You would want to click on the earnings item. I recommend earnings item. That way you can, if a person works on multiple jobs within a week, you can break it out that way. Let's go to the next. So let's look at some of these default preferences here. This is how do you want their paycheck to look? How do you want their name and address to look? What title do you want to give vacation? Do you use sick pay? What title do you want to call it? Do you want your EIN number on the check? Most people do not. So how do you want that done? Next one is workers' comp. It'll track workers' comp. If you assign the categories to each worker, it'll build that for you if you turn this one on. Another one, if you do sick and vacation, how do you track those if you do? This can be programmed and customized. So very, very helpful. The employee defaults, this is good so that if you hire a group of people, especially at the start of the season. If you want to put in their name and some basic information, and this default screen can come up, program all the regular pay. They're all the same, their schedule, the pay frequency, the class where they'll be working, sick vacation. So this is really helpful, speed it up when you hire multiple people at the start of the season. Sales tax preferences. I'm not going to go into this too much. This is another unit that we could cover. Do you charge sales tax, yes or no? South Dakota is one of those states we have excise tax. Unless you have an exemption for certificate from the prime, or you are responsible for that excise tax. So make sure you have to speed it. QuickBooks has some great functions in tracking sales tax, how you remit it. Highly recommend that you implement it if you are sales tax as part of it. The setup is the key, just like our chart of accounts and go through these preferences. The setup really makes life easy going forward if it's set up right. Do you file 1099 forms? Let me word that another way. Do you have subcontractors? If you do, then you need to file 1099s. And just like employees get W-2s, and subcontractors get a 1099. And you can click here to map your accounts, and you can tell it that anybody who's a subcontractor, I want to track that company's services as a 1099. So, not everybody, a company that's a business that has its own EIN, they're not going to get a 1099. But if you hire John Doe or Jane Doe to do a small cleaning or small part of the job, you want to be able to give them a 1099. QuickBooks makes it easy to track it if you use this option. Next up is time and expense. Do you track time? Yes. It's really helpful to have that when you do enter time. When you enter time, you get like a spreadsheet comes up and you get the days of the week, different tasks they worked on, really slick to fill out their timesheet. So if you track time, I would say yes. First day of the work week is actually Sunday. By law, it's Sunday through Saturday. So not many people work on Sunday, but these marked all times entries as billable, turn those off. Those are good for maybe law firms, but I've not seen anybody use those. And one person say, well, isn't everything we do billable? Well, yes, but not line item per line item. It's all built into the cost of the contract. So anyway, just some pointers on tracking time and expense. Talk about items. Okay, so remember, chart of accounts is the skeleton or the framework. Well, items can be mapped and point to different kinds of items. So some examples are easier. So this really makes it easy to train your bookkeeper. He or she doesn't have to know all the widgets you sell. If the items are already in the system and the accounting that goes with them, it will do the accounting in the background. So that's why setting up items is really helpful. We've seen some with just a few items. Some of them have multiple pages, so it's up to you. But the more detail you want, they're all going to be mapped, as we say here, to the general ledger chart of accounts. Most of the type is going to be service, and you hear some example of names of revenue items. Taxable, or I would put them all as taxable. You can turn the taxable on and off by customer if need be, but it's easier if it's all taxable at the setup. You can program rates for each of these items that comes up for each customer. Down here in the corner is when you set the general ledger account. This is the landscaping services in this example. Okay, items, service items. Here, this is the other side. This is buying, and there's cost of goods sold. So here you set up a non-inventory part. So if you're building homes or commercial buildings and you buy the various items shown on the screen, you can track those, but they'll all hit a cost of goods sold to the same category on the profit and loss statement. So even though your profit and loss, instead of having 10 items, they all can point to one for, say, titled building materials, job materials, et cetera, something like to that effect. How about when do you want to do this? If you're look at your system that you're using now and you need to make a change, when's their preferred time? So start here, beginning of the month, during the slow season. Big pointer here, make sure you have apples for apples information. So if you have a payment due next month and you record it as this month, and how you get to that cutoff, or somebody owes money to you this month, and they pay it next month, how do you reconcile that as you move to the new system? So make sure you have apples for apples. Sometimes if you have advanced skills or something you may be able to do, you may, after a professional review, you have a relationship with an accountant who can help you with that. Oftentimes a negative in the wrong place, shows errors that can be quickly fixed if it's caught early in the installation. So slow time of the year is always a good time. Not a lot going on. Start of the year is really good. After you get payroll closed out, get everybody paychecks written. You might, for the first couple of payrolls, have your old set of books and your new set of books, right? Paychecks sort of twice, to make sure that they're correct and you're comfortable as you roll over into your new system. So, is there a preferred date? Yeah, it's start of the year would be best. So there's some pointers, like I said, on just some things we've seen that could help people a lot as they start setting up their accounting system to get it right to manage your business better. Those are a lot of other topics coming up. Thanks for tuning in. I'm Greg at Project Solutions, DBE Support Services for the state of South Dakota. Appreciate you tuning in. If you have any questions, please give us a call. Thank you.